Thanks very much. I know my kids are going to be really impressed with my ability to clear a room. Anyways, full disclosure, I won't be as exciting as the last speaker. Anyways, we'll get started. I'm really excited to be able to talk to you today about where IAMGOLD is and where we're going. We've got a great future ahead of us, and I'm looking forward to working with the team to make it all happen over the next while. Cautionary statements and technical information. ESG is a point of conversation that's changed extremely rapidly over the past couple of years. I hadn't heard the term myself until a couple of years ago. And at the same time, as IAMGOLD, we feel very comfortable about it. We've had our zero harm policy in place for over a dozen years. We actually have the copyright on the term zero harm. For anybody else who shows it to you, you can remind them of that. But zero harm is a way that we've operated and always operate, and it's our view of how anybody responsible should be mining. So the step into the ESG framework is a very simple one for us. It's more about us describing what we do and how we do it than it is having to put anything brand new in place and carry it forward. And I have a couple little shots later on that can sort of talk to what I'm talking about, that we're not new to this game, this is what we do. And you can see up on the screen, we've received a lot of external recognition for our work in ESG. So happy to engage anybody in a conversation about it should they wish to do so. Our existing assets, our existing producing assets are the Essakane mine in Burkina Faso, the Rosebel mine in Suriname in South America, and the Westwood mine just outside of Rouyn-Noranda in northern Quebec. These are all mature assets, certainly Rosebel and Essakane. Westwood's a little newer to the game, but it's within a mature camp and within a mature property. These are great assets. They've worked very hard for us, and they're older. Rosebel started in 2004, Essakane started in 2010, Westwood basically started in 2015, although the property's been worked for over 30 years. What that means is they are what they are. We certainly have the opportunity to improve, and we do so, strive to do so on a daily basis, improve the quality of our operations. Westwood probably has the greatest runway in front of us in order to improve, and we can deliver value from those assets. However, I mean, the expression I've been using is they're mines, not wines. They don't get a lot better as they get older. They get more and more challenging. You got to put your head down, you got to work hard, and we can continue to deliver value, but you can't expect a material game-changing alteration in what the economics of those operations are. The die has basically been cast. You can modify it, you can play with it, but we're not going to turn it into something it's not. So what does that mean for us is for our company and for our future is understanding where we can go, and the future of our company does go through development of greenfields assets, and I'll come back to that a little bit later. IAMGOLD historically and currently continues to maintain a very, very strong balance sheet. It's something we've always done. You always need to keep a little powder in the keg for a rainy day, and we have been able to do that through both the bottom and the top of the cycle. We currently are sitting with nearly $850 million of cash in short-term investments. We have a $500 million untouched credit facility available to us. On the debt side, we have $400 million senior note, which isn't due till 2025. So we're in very good shape cash-wise. Our objective now is to put that to work, to deploy that, to take our company where it needs to go. We've had a lot of success in past years in building a strong pipeline, and I will come back to a lot of this discussion later. You can see we have opportunities on all continents and in all of our camps to continue to improve. Reserve and resource update, because it recently came out. We're sitting at current production rates, we're sitting with a little over 20 years in reserves. We have a very comfortable M&I resource status. We're fairly flat year over year, and reserve and resource results tend to come in lumps, depending on where you are in your exploration cycle and where you are in your development cycle. This year, the larger lump we came with was inferred resources, increasing inferred resources by over 3 million ounces this year on the back of a maiden announcement around our Nelligan deposit in northern Quebec, and some growth in our inferred resources at our Côté Lake project in northern Ontario. Little slide that I find quite interesting. This one talks to reserves. I could show something equivalent on the resource side. It has been an objective for us to grow our future through the drill bit. It hasn't been completely in vogue in our industry, but at some point in time, you got to find new reserves and resources. So this basically shows the top 6 producers in public companies and what has happened to their reserves since 2012. You can see our line in orange, different scale, I will admit, but you can see where our objectives have taken us is to continue to build our reserves. And that is after depletion. That is after vending some assets away. We vended off a portion of Côté. So we're very, very proud of what we've been able to do on the reserve side. And as we look forward at our pipeline, my expectation is that we will continue to be able to build it. And at some point in time, there will be a bit of a reckoning, I believe, in the marketplace when people realize that if your competitors only have 3 or 4 years of reserves in front of them, what's going to happen to those companies? What company do you want to be investing in? A little bit of an overview of where we are situated in the world, and we've been in all of these environments for 30 plus years. So IAMGOLD as a company started in French West Africa. We continue to operate there with our Essakane mine and our Boto project. In South America, we have the Rosebel mine and a number of exploration plays. And in Eastern Canada, we have the Westwood mine and the Côté Gold development project. These are 3 environments we know very well. We know them very well from an operational standpoint. We know them well from a political and corporate relations standpoint. And we really know them well from a geologic and exploration standpoint. And that long-term knowledge, that steady beating of the exploration drum does yield results, but you have to know the environments you're in. This is not a stop and start business. A little outline of some of the catalysts that we've been able to achieve last year and what we're looking at this year. We're bringing on our Saramacca deposit in Suriname near Rosebel. We're doing a debottlenecking exercise at Essakane in West Africa. At Westwood, we're going to put some meat, some little data behind the most recent mine plans that we've announced. And of course, the really important one for me is looking at the growth projects and which direction do we go with respect to those growth projects, and stand by further resource delineation to come. I spoke a little bit earlier about ESG and how it may be a bit of a fad. Here's a very large solar plant that we built a couple of years ago, commissioned at Essakane, created one of the largest hybrid thermal solar off-grid power facilities in the world. A great investment for us, provides on the business case, provides a natural hedge against oil price inflation. We generate power for more cheaply than we do our thermal with the solar, including the amortization of the capital cost of this project over the life of mine that was in place at the time we built it. We have opportunity if we extend the life to see reduced prices. We have some opportunity to increase the size of it, and this was built with other people's money. This was an outside capital investment, didn't touch our balance sheet. And importantly for us is we get to leave something behind when the mine is done that the community is going to continue to benefit from. Our 2020 production guidance and cost guidance is 700 to 760,000 attributable ounces for IAMGOLD at all-in sustaining costs of $1,100 to $1,150. In terms of production, this is our lowest point in many, many years, and in terms of cost, it's our highest point. If I look year over year, it's very comparable to what we did in 2019, excluding the contribution from the Sadiola mine, which is in the process of closing down. And in fact, we announced vending to a third party with our partners, AngloGold Ashanti of Sadiola, in December. So that sale will take place this year. But going forward, for our existing operations, 7 to 760, 1,100 to 1,150. When we came out with our guidance in January, we also did a look-ahead guidance for 2021. What you can anticipate to see in terms of production is about a 10% growth year over year as we move into next year, and a commensurate drop in the all-in sustaining costs. And as I look at the 5-year plan for the existing assets, I see continued growth into the 5-year plan and continued contribution of free cash flow to the bottom line. When we ran into some challenges early last year in the rush for free cash flow, we revisited our mine plans at our operations and took some steps to generate additional free cash flow in the near term. Over the course of a mine, as you get into multiple pushbacks and historic or traditional optimization, you can get into periods where you don't generate cash flow on classical mine engineering. We went back to the drawing board and tried to come up with an intermediate solution. We kept our design prices low, which gives somewhat elevation of the short-term cutoff grades, and increased the discount rate at which we were evaluating our plans. Both of those serve us to still give you an optimum, but pull some cash forward, potentially at the sacrifice of some resources and reserves. We continue to work on making sure that that is not too drastic. But that has allowed us to fulfill what we talked about last year as our self-funding model, self-funding being generation of cash flow at the existing assets to cover already operating costs, sustaining capital and non-sustaining capital at the existing operations, corporate G&A, corporate exploration, and the interest on our corporate debt. That leaves the balance sheet in a place for us to make decisions about how we deploy it. And obviously, as prices move up, I mean, we did our evaluations, our planning at $1,350 long term. At those prices, we're self-funding and continue to build that going forward. At current prices, we do even better. Our CapEx outlook for this year is $370 million plus or minus 5%. I would caution people, or at least point out to people, this includes $65 million for corporate and development projects. As I look at those corporate and development projects, as we've stated publicly, we will be making a decision as to whether we take Côté forward or Boto forward in the near future, and we will restate what the capital outlay is for this year at that point in time. Looking at the Rosebel mine in Suriname, we had some issues last year with small-scale miners invading our pits and a confrontation with the local authorities. As a precaution to protect the safety of our people and also protect the safety of everybody, we took the decision to shut down our mining operations for a period of time. Mining operations have returned to normal. We're generating good gold production now out of Rosebel. And we've also taken steps to ameliorate the issues with the community and with the small-scale mining community to strive to make sure things continue to work positively going forward. And working with the government, we strengthened our security capabilities on the site. The big story for Rosebel this year will be Saramacca. I know for some it may seem like we've been talking about Saramacca forever. I just sort of remind people that we took possession of the Saramacca property in the second half of 2016 with a few drill holes and no resource on it. So between 2016 and now, we've been able to drill it out, define a resource, define a reserve, and build a project. And our haul road will be completed in March, and we're going to start production. And there are very few projects from taking possession of the property to ore hitting the mill that can do that in 3 to 3.5 years. It is a challenge, and it's a great reflection of the talent, I think, of our exploration teams and our development teams. Looking at the Essakane mine in Burkina Faso, Essakane certainly over the past years has really been paying the groceries for our company. It is our main source of free cash flow and has been for a couple of years. Producer over 400,000 ounces on a 100% basis. Cash costs in the $900 to $1,000 range for several years past. Currently, it's in a high stripping cycle. We're back up at the top, driving some new pushbacks, and it'll be that way for a couple of years. That being said, I expect similar performance out of Essakane compared to 2019 for this year, and a slight improvement as we move into 2021. As we look beyond 2021 to 2022 to the end of life, that stripping drops back and the cash flows from Essakane really start to take hold. What you're looking at in this chart in blue is the current production schedule as described in the 43-101 document we put out describing our heap leach project. And you can see continue to operate in that 400,000 ounce range for several years. And as we get down to the high grade at the bottom of the pit in 2025 and 2026, a very nice pickup in gold production. Beyond that, beyond 2026, you can see the production from the heap leach operation, which we have the decision to make in 2025 as to whether to build or not. The gold and yellow slide columns, if you will, are from the pre-feasibility study, in which case we had been looking to run that heap leach in parallel with the CIL operation. As we examined the economics, we see net savings of about $60 million in capital by deferring that decision to later. And we really like the optionality of deferring that decision to later because we can make that decision at that point in time, or we can take a decision to run the heap leach ore through the existing CIL plant, depending on what the economics look like. At our Westwood mine in Quebec, we had a significant seismic incident at the end of 2018, which really drove us to rethink our development there. The Abitibi region is known for high seismicity, and this has challenged us. And it's interesting when we talk to our neighbors in the area, a lot of them have gone through the same thing over time. Our challenge is our working areas are limited, and when we have a major interruption, it really interrupts the operation. Whereas the more mature mines have opportunities to go a lot of different directions. That being understood, we step back, understanding that costs for high-grade underground mines in Canada are really driven by labor. We had to take the unfortunate decision to reduce our workforce, and we reduced by about 30% last March. And we re-engineered the project and came out with the release in December sort of describing what I think of as a base case for Westwood, which describes a long life, safe and profitable operation. We have opportunity to do better than that base case, and we will be building on that now, but I wanted something that we could demonstrate as doable and then move from there. The medium-term strategic opportunity for Westwood is the plan that we've put in place only occupies about 60 to 65% of the capacity of the Westwood mill, or the old Doyon mill, if you will. So we are looking at regional opportunities, and we've come out with a number of press releases about some drilling we've been doing on the Rouyn Gold property in Rouyn, where we've identified potential for about an 800,000 ounce resource that could be brought to bear in three to 4 years to supply 40 to 50,000 ounces on top of the existing Westwood production rate. Getting to the development and exploration projects, and we're in an interesting situation, as I've described it to a number of investors over the past couple of weeks here. It's almost a classic business case scenario here. We've got 2 shovel-ready projects. We have the Côté Gold project in Northern Ontario, major project, transformational impact on our operation. Our share of this project would be about $800 million. We're a 70% owner. We have a serious partner. Sumitomo Metal Mining from Japan owns 30% share. What Côté does for IAMGOLD, it provides us, for the first 9 years, sort of in the neighborhood of 275 to 300,000 attributable ounces on an annual basis at an all-in sustaining cost in and around $700. It has a mine life currently of 18 years and is a real sustainable operation and a real rudder asset for a company of our size. We tried to bring Côté to construction about a year ago and sort of got whacked in the back of the head by the market and saying, don't do that. And we stood back and said, okay, we'll wait for the market to change, but we'll continue to de-risk that project. My thesis is the market has changed somewhat in the past year, notwithstanding the change today, but still, we're $250 to $275 an ounce higher than we were a year ago. And the value of large, long life producers in stable jurisdictions has been demonstrated to be fairly high. This one, if you look at the analyst reports, the gap between that, even after an $800 million investment, and the potential valuation is huge, and we have the ability to recognize it. What have we done to de-risk it? Currently, we're over 50% detail engineering complete. For most people who understand development projects, you quite commonly enter into a development project when you're somewhere between 5 and 10% of detail engineering complete. Well, what does that mean? It means we know what we're going to have to build, and we have a much tighter set of goalposts as to what it's going to cost us, and we understand that. We've advanced in relation to our community relations and the environment. We've advanced our permitting. In April, last April, we signed an IBA with the First Nations in the area. We've done some additional drilling, remodeled the deposit, specifically remodeled it from a more conservative standpoint, and just to test the robustness of that model versus our design. We've gone back and recosted all of the inputs into the project, and it continues to hold steady. We're not seeing any material changes in the capital envelope. We've made some adjustments in the operating cost profile, but certainly at current prices, I mean, we're showing rate of return here at 15.2 at $1,250 gold. At $1,500 gold, we're talking over 20% ROI for this project going forward. A very attractive investment. And we've added some additional exploration potential. I know I tend to harp on the exploration potential. Probably I just had a meeting with the exploration team this morning. But we announced the Gosselin find, which is about 1.5 kilometers to the east of Côté. So Côté, 10 million ounces M&I resources with another 4 million ounces in inferred. And we've got a target 1.5 kilometers away, similar grades, 3 to 7 million ounces. I'll speed it up. Boto. Boto is another great project. We need to understand which one we're going to choose. It's a smaller project. It's more of a bolt-on project. $250, $260 million go-forward investment, 2-year construction. What does it do for us? Well, it's going to give us about 145,000 ounces of attributable ounces to our account for about 6 years. And then it starts to drop with a mine life of about 10 or 11 years. All-in sustaining costs in the $825 to $850 range. Still a very good project and a very worthwhile investment. Has much less impact on the corporation as a whole. So that's the decision point we're at. I've been out speaking to a lot of shareholders, a lot of other investors about what we're going to do and why the rationale behind each of these choices. And I'm comfortable with either choice. I do have my favorite, as you can well imagine. And that decision is going to be made here in the next couple of months. Boto does have a future as well. District potential. I'm not going to go into it too much, but I'm happy to talk to people about it if you want to go through it later. We have approximately 5 to 7 million ounces over 14 kilometers. When you look at Boto, Karita, and Diaka, unfortunately, they sit in 3 different countries. So it's going to take us a little bit of work to figure this one out, but it'll be fun to try and figure out. Speak a little bit to Nelligan, our new deposit. We announced maiden resource of 3 million ounces at a gram in the Chibougamau area of Quebec. We won Discovery of the Year from the Quebec Exploration Forum, and we're very proud of this project, and it's nice for us to understand what the next potential project is in the rank going forward. And I'm going to leave it at that. Thank you.